Hello, welcome, and sorry. This is our weekly live stream here, Maple Bitcoin. I'm joined by Rajat. No Jor today. He is preoccupied with something else. So we wanted to start the live off talking a little bit about how to never sell your Bitcoin. That's the title of the live stream here. A lot of people, I mean, Bitcoin's down, right? It's down from its all-time highs. This causes strain on people. Oftentimes, I think the biggest problem is sort of expectations. People will have like, oh, Bitcoin does this, right? Bitcoin, if I buy Bitcoin in 1 year, 2 year, 3 years, right? It's always backwards looking, and it's always sort of that people project forwards what has already happened with Bitcoin. And Bitcoin is very volatile, and sometimes that works and sometimes it doesn't. And the more you sort of plan for something to happen, the more you'll orchestrate your whole life for it. And if that doesn't pan out, then it could cause some issues. So the big issue there is people sort of needing to sell their Bitcoin, or that needing some cash flow, needing some short term, having needing some short term obligations there. So we want to talk about a few different things. Yeah, maybe I'll just toss it over to you, Rajat. What do you think about this subject here?
Yeah, absolutely. We're missing Jor. Where is he? He's in Nashville.
I don't know.
Is that what he said? I think he said Nashville or something like that.
Mm.
Um, he's going. He's somewhere though. He's not in the country anymore. So now he's a city boy. Um,
Uh,
yeah. So this point of never selling your Bitcoin, I think a lot of people are in that position right now where they need liquidity and they need to pay for things and they don't have enough money coming from their job. Just like the easiest way to explain it.
yeah.
A lot of companies just the raises that you get from a company are not enough. Like just like simply put, like they're not enough because you're getting a 2% raise while your cost of living is rising 7%, 10% per year. So if your cost of living keeps rising, you don't have any other sources of income. How do you pay for your expenses? I know a lot of people that are in that situation is that a lot of people in this situation don't have assets to begin with. But if you have assets, you may still be in this position, and you may be thinking, "I need to sell my stocks. I need to sell my real estate. I need to sell this, and that to pay for my expenses." And I think I think Bitcoin backed loans are perfect for that. Rather than selling your Bitcoin, and people are talking in the comments about the Strike uh, line of credit product.
Hmm.
Uh, what's BLOC? Bitcoin line of credit.
Bitcoin line of credit, exactly.
So what the world is doing now is Bitcoiners, actually people who I would say they're Bitcoiners because they're people who are trying to help you to pay for your expenses without having to give away your Bitcoin. I think they're the best Bitcoiners because they're helping you to hold on to your Bitcoin while they charge you a fee, and they're being productive, they're creating something of value, and they're making your life easier. So you can use these things to your advantage in a way to get cash, so get your instant gratification, but also get your delayed gratification. Because if you keep your Bitcoin in one of these products, then you not only keep the Bitcoin keeps appreciating, but you also get to take advantage of having that liquidity today. So instead of going bankrupt, let's say not being able to pay for your house or having to sell your Bitcoin to pay for your house, borrow against your Bitcoin if you need to. In the worst case scenario, borrow against your Bitcoin. The interest rates are still pretty high, but you can borrow against your Bitcoin and you can pay for your expenses if you need to. Or you can use your Bitcoin backed loans to buy cash flowing assets. Let's say, for example, if you buy, maybe STRC doesn't really make any sense, but there was another one, BTCI. People
Hmm.
mentioned that one. I did a little bit of research on that one. It's basically paying something like a 2.5%, or sorry, it's like a 1.8% dividend every month. So it works out to about 20% per year, 22% per year. And I think that adds up. You have, let's say, an 11% loan, 18% interest from, or 18% return from the asset. You use the asset cash flows to pay off your loan, and you never have to sell your Bitcoin.
Hmm. Yeah, and I think there's obviously going to be a lot of nuance with these kind of things. One of them is, these products that Strike has. There's monthly interest that you have to pay on it, I believe.
Yeah.
Something like Leadin, they've geared it so that you essentially pay off the loan every year and you have the ability to refinance it, and that's when the payment kind of comes due. And if your Bitcoin has out appreciated the cost of the loan, then you can refinance. Otherwise, you might have to add more collateral, which might benefit you as a Bitcoiner because then you don't have fiat on the side, right? Like you took out that loan, you're able to use that cash for whatever expense you had, but then you don't have to have extra cash on the side to pay that monthly loan. Maybe that makes sense. Maybe it doesn't. Maybe the Bitcoin line of credit makes more sense. And it's really, I think that's again the nuance of this whole thing is that um, is figuring out the terms of these loans because a lot of these are yearly. So if the question arises, what happens if you take out one of these loans and Bitcoin drops 50% from there? Okay, well, you're not going to be able to refinance with the same capital that you have. You're going to have to add extra capital at the end of the year to do that. So you aren't going to want to, obviously, right there, it makes sense not to do this with your entire stack, right? This is sort of a balancing act of
Yeah.
being able to balance your portfolio with with these loan products that are able to give you a bit of fiat dollar liquidity when you need it, not unnecessarily, right? Like you don't do one of I wouldn't say you do one of these just to have more cash and then you go and spend it on something, right? That doesn't really make
A
sense,
vacation.
right?
Yeah.
Yeah, exactly.
And
It
that
doesn't make sense.
depreciates right away.
Exactly. And people might think, well, it still makes sense to do that because the Bitcoin's going to out appreciate the loan. And that is probably true over a long enough period. But it's all dependent again on the terms and the length of the loan, the ability to refinance, all of that.
Can I ask you a question? So let's say, for example, you have cash to pay for a vacation, and you have enough Bitcoin. You use that Bitcoin as collateral. You use the cash to buy more Bitcoin. You add more Bitcoin to your collateral, and then you borrow to pay the vacation.
Yeah, I mean, you could do that, but so instead of just paying the
So
cash
you
that you
already have
have
the
on hand,
cash instead of paying cash. Yeah.
yeah. I mean, it might make sense to do that. I would say the other concern there is Bitcoin in a loan has a different risk profile than Bitcoin in self custody.
Yes.
So I wouldn't be doing this sort of willy nilly. I would be doing this really intentionally. Um, so it might make sense sort of just in a pure numbers way, but there's sort of these hard to quantify risks or scenarios. Again, refinancing. I've mentioned this multiple times, but what happens if interest rates go up, Bitcoin goes down, um, refinancing happens, and you're going to have to put more capital in there. It just becomes and maybe it's something even that you can do, but then it just becomes sort of a headache to manage these things. And maybe that is added stress. Whereas if you just paid cash for something, it might nominally not make sense for in the long term, but just be less of a headache.
Yeah. The
Um,
stress.
the stress, right? That's the big thing, right? But I think ultimately what's important here is being able to access the same type of strategy that the ultra wealthy are able to access, the buy, borrow, die.
Yeah.
And the terms are not as good. The asset is volatile, but if you adjust how much you put in, what your LTV is, you manage these things, um, it can be done fairly safe, I would say.
I,
And it's just I just wouldn't do it with a huge position size. That's all.
yeah. So something that a lot of people, I agree with everything you just said. I think everything you said is really important. Um, but something that a lot of people are worried about is they don't want to pay interest. But I
Yeah.
don't think that really makes sense. I think there is a productive way of using debt, and there's an unproductive way of using debt. So
Yeah.
let's say, for example, if you're not interested in paying interest for a car, and that car you're just buying it and you're sitting in your driveway. There's no real reason for you to buy it. I think that's smart. Even I mean, any percentage of interest in that case doesn't make sense. Even if it's 1%, 2%, 3%, doesn't make sense. But let's say, for example, if you could buy, or sorry, if you could go to your bank, get a loan at 3%, 4%, 5%, and then you could put it into something that gives you 30%, I think that's a smart decision. So let's say, for example, I'll give you an example of myself. So I signed up with a business coach, and it's costing me a lot of money, 5 figures. But I think that that 5 figure investment is going to get me 6 figures back. And that's within this year. And let's say next year I can get another 6 figures. Then the next year I can get another 6 figures. So to me, I have the cash to pay for this, but I don't want to pay for it in cash. I want to just buy Bitcoin. I'm okay with borrowing money to do it because the interest rate that I'm paying is 8%.
Hmm.
8% to me is okay. I'm okay with that because I know I can get 20, 30, 40% return year over year from this skill that I'm building.
Right.
And that skill has changed my life forever. It's changed my mindset. I'm already seeing it. And to me, that's worth it. I think there are times to borrow money and there are times not to borrow money. If you're just borrowing money because you want to, you don't have cash and you want to go on vacation, you really, really feel like it, then that doesn't make sense. But let's say if you have the cash, most people aren't in this position. Most people don't have cash. You have the cash. You could pay for the vacation in cash, but you are being smart. You already have an emergency fund. You already have sinking funds for multiple different things. And instead of paying for the let's say Bitcoin's down 40%. Instead of paying for the vacation in cash, you use it to buy Bitcoin because you know that when Bitcoin goes back, your return will be higher. Your
Yeah.
return will be higher than whatever. Let's say you're paying 10% a year on your line of credit. You put your vacation on that. Bitcoin will be up 80% when it goes back to its all-time high. So let's say in 3 years, you paid 30% interest, but Bitcoin's up 80%. So you benefited from that 80% growth.
Yeah, these comparisons in these examples are really good to illustrate because what you're saying essentially is taking on a loan with an interest rate. The reason to do that should be an investment. So even if you have a short term expense, um, maybe that expense has maybe it has to be paid, right? Like if it's a mortgage or something, what is the expense of not paying your mortgage? It's going to
Yeah.
compound. It's going to be such a big headache. Or maybe you take out a loan to buy those cash flowing assets. You're able to do a yield arbitrage play. That is the reason. These are the reasons to do that, right? It's not it's not to spend it on something unnecessary because you want it, because now you have this debt obligation that you have to pay, and that thing that you wanted just is ending up costing you more over time if you don't have a way to repay that or to outpace it with the investment that you made using the cash from the loan. This is That's the only time it really makes sense, in my opinion, is in a way of being able to use cheaper debt to outperform it in some way. So you talked about your example of taking out debt to build a business that's going to return more. A really simple one is taking out debt to buy more Bitcoin, and the Bitcoin's going to out appreciate it. This is a huge part of the financial market. So people will talk about how Japan is the margin of the world because they have such low interest rates in Japan. So people borrow Japanese yen, exchange it for dollars, and then buy US equities or bonds or basically anything that will pay more on average than the cost of the capital. And it's a simple arbitrage play. So you can do that as an individual. The rates are going to be, again, not as good. But Josh actually had a great example in here. Strategy is willing to pay 11% interest in perpetuity on capital raised to buy more sats. And I would say there's a few caveats there. Like, he's not raising debt. There's no principal repayment with the preferred equity. It's a variable rate equity. So if interest rates, if they reach the demand, they can begin lowering the interest rate. These kind of things that they have a lot better of terms, I would say, for their capital raising than you or I, which is part of the investment thesis to buy MSTR, right? But nonetheless, they're still doing the exact same thing. They're saying, okay, I think Bitcoin's going to outperform 11%. I'm going to use capital that I raise at that price to buy Bitcoin. I think this is when it really makes sense, is when it in some way is a financial investment that you're doing, even if that is paying off worse debt that you have, or investing in things that don't necessarily immediately pay back the same, that more than the interest rate, like building a business or something. Like this is what the whole financial system is built on, is using future capital to build something that pays it back eventually.
Yeah, there's completely agreed. There's a advantage to the people who understand that borrowing dollars is to your advantage. It's it's like if you don't do that, one of the things that I've noticed is that a lot of the people who are playing, a lot of the people who are poor don't quite understand the rules of money. It's not like they're poor because of the fact that they're not creating enough value. They're poor because they're saving their money in the wrong way. They create value even if you make minimum wage
Mhm.
and you buy Bitcoin with it. Eventually, that minimum wage that you use to buy Bitcoin will save you a few years of your expenses. Like that's what it'll do, because over time it'll compound. It'll compound. Even if you buy $1 a week, $1 a day, $1 every hour that you work, whatever you can do, set it aside because that'll be worth it. In the legacy system, what people are doing is they're just keeping fiat, and the value of fiat intentionally is going to decrease over time. It's designed to do that. Like it's designed to work that way. It's designed to fall over time because that's how they get you to keep working.
Yeah.
It's all tied together. Think about it. The Federal Reserve's mandates are to keep prices stable and to keep unemployment low. Why do they care about keeping unemployment low? It's because they need you to keep working. If you don't work, the dollars that they create have no value. If you don't have to pay taxes, the dollars they create have no value.
Mhm.
Where does tax income come from? It comes from income taxes. Again, if you don't work, half the people in the world won't have to pay income taxes, or in the US, half those people won't have to pay income taxes, and that immediately kills the dollar. So all
Yeah.
of this is tied together. Like this may seem, a lot of people probably think, oh, this is a conspiracy theory channel. These guys are idiots. They don't even know what the hell they're talking about. But you can see the charts. All the charts show it. If you take a look at the US government debt, if you take a look at
Can I
the
just
chart,
interject
yeah,
there
yeah,
for
of
a
course.
second, Rajat? I just wanted to touch on that unemployment metric. I mean,
Yeah,
if you think about abundance, if there's abundance in a society, doesn't that mean more people are able to not work if they want to?
yeah,
Like, why, like, people could retire earlier, people could go to a single income family, but because of the fiat system, it they make it look good that people
yeah,
are employed.
yeah,
But there, I mean, I'm just saying there's an argument saying that actually a level of unemployment means that there's an abundance of wealth and people can be unemployed. I know some of the metrics they look at is people seeking employment that are unemployed and all that, but that's just a little caveat argument that I wanted to put in there.
yeah. I like what you're saying. I feel like that makes so much sense. People shouldn't have to work.
Yeah,
If the economy is doing so well, then why is everybody having to work more?
exactly, exactly. You said this at the beginning of the show. It's the wages don't keep up with the cost, and it's intentionally designed that way. Fiat debasement happens at a more rapid rate than wage increases, so everybody is actually getting worse off, and poorer and poorer. And that's because they're dependent on the wage. When you're an employee, I mean, it's so counterintuitive, but like, and I think this narrative is starting to erode a little bit, but people are talking, people, I grew up even reading, listening to people saying, "Oh, you got to go to college, you got to get a good job, you got to have job security." And the entire time I'm just like, I know people that have been fired. I know people that have lost their job. I know businesses have failed. How is that secure when you're just dependent on one thing? Like that seems like the exact opposite of job security or wealth security to me. And I think people are kind of waking up to that to some degree, but um, it just doesn't. You just if you think second order to a lot of these sort of narratives in the world, you start to be like, oh, well, actually, that doesn't make sense at all.
Yeah, like what you said there, I think a job is probably the least secure
Yeah,
source of income. Because if you have a job, it's not like you control it. You have no power over it. You can get another job, but like the job that you have no control over it. Your employer can fire you immediately at any time. You piss them off, you're fired. You say something that makes them think that you're challenging them, they can fire you. You ask too many questions, you don't do your tasks fast enough, you're not productive enough. You can get fired immediately.
even if they're not productive enough, now they
Yes.
can't have employees, right? Because they're like, well, I need to keep my job, so I got to fire
Yeah.
somebody else.
Yeah.
It's
Yeah.
just so scary. Like it's
It,
so scary to be that reliant on something like that.
yeah. Completely agree. Yeah. It is scary because and most people don't think of it that way. They think, "Oh yeah, it's like having a stool with one leg."
Yeah, pretty
Right?
unstable.
That's the only thing, like, that one leg is the only thing that's keeping you up.
Yeah. Yeah, and the so what is the option, right? And the option is to start thinking about it's not necessarily about like side hustles and creating alternate sources of income. That can be helpful. That can give you another leg to for your one-legged stool there. But it's also just about thinking about what do people that are wealthy do? Well, they get assets, they get productive assets, they get assets that outperform debasement. They're able to like they have savings technology, right? That's what Bitcoin is. Like Bitcoin is not a cash flowing asset, but it is an asset in the adoption cycle, and ultimately it is sound money which will appreciate at the level of abundance in the world. So if you think about that, well, okay, well, at least I can save what I earn at my job, and I can wait a little while to be able to purchase things, and I'm not losing out on my savings. And then it's about increasing your value in the world. Maybe it is about some cash flowing assets to some degree. And this comes back to the loans, right? Like this is what wealthy people do as well. They find these arbitrage opportunities with debt. They take a calculated bet on the future, and they do that with other people's money. That's what you're doing. And it's and this is an interesting comment, actually. Not everyone can be an entrepreneur. Exactly.
Mhm.
That's not what I'm saying, right? Is not everybody has to be, but you have to be thinking about how do I retain the value that I have created, which is savings, and how do I amplify that potentially with investing, right?
Yeah.
And that's what we all need to do. It's because we live in the fiat system. The fiat system will constantly get more expensive, and your income will not keep up with it unless you constantly rapidly improve the amount of value you provide to the world. And in a lot of cases, that's not something that I mean, you might be able to do that in a sprint, or you might be able to do that in some cases, but a lot of times that's going to be difficult to do because of your circumstances, or you're stuck in a job where it's literally there are these ceilings that you can't get past and things, right? As we said before, and um, again, there are other opportunities you can do, but not everybody can or wants or needs to be an entrepreneur. But everybody needs to think about how to retain the value that they've created in the world.
Yeah, we're not telling everybody to be entrepreneurs. We're telling you that you have to find a way to keep your income. Being an
Yeah.
entrepreneur is just a way to earn income. Getting a job is a way to earn income. Starting some kind of business, that's a way to earn income. Buying stocks, I would say, is a way to earn income. Buying real estate is a way to earn income because you're lending out the property, you're getting back cash flow. None of those things are ways to keep your income. People think that stocks are a way to keep your income. People think that real estate is a way to keep your income, but there's a lot of speculation in those assets, and those assets can be extremely volatile, and they could easily go down 95, 100%, 99.9% in
Hmm.
terms of Bitcoin from here, and they will, because both of them are being used as a store of value, but they're not a store of value. All of that value is going to move into Bitcoin. So, however you earn your money, it's perfectly fine, I think having a job is you have to be rewarded properly to keep your job. You have to
Mhm.
either be learning something or you need to be making an appropriate amount of money. If you're struggling at your job, don't keep it. Find a way to leave it. You have to. Otherwise, you're going to be struggling forever. If you don't change something, then you're going to struggle forever. You're going to keep struggling. With Bitcoin, though, you get to keep your value. You get to keep the value that you're creating. And then, like Forrest said, it's at a part in its adoption cycle where the price will probably outpace everything else. It'll grow faster than everything else because most people don't have it. As
Yeah.
people want it, as they figure out what the benefit of it is, they'll want it and they'll pay whatever they can for it. They'll give away their fiat currencies for it. At some point, nobody will want fiat currencies for Bitcoin, and you're going to be working for it at that point. That's the point.
Yeah.
You're going to be working for it at some point. So work for fiat today while Bitcoin is cheap, while people are still willing to accept pieces of paper for their Bitcoin. Work for fiat, buy Bitcoin with it, hold on to it forever, and then find ways to keep generating cash flow. So borrowing against your Bitcoins is one of them.
Mhm.
Um, Buying cash flowing assets is one of them. Of course, if you just buy Bitcoin and sell it, you'd probably be much better off. And earning, keep earning an income. Build a business. If you build a business and it keeps generating revenue going forward, you never have to sell your Bitcoin.
Yeah. Yeah, and Bitcoin is not about a 6-month time frame. If you're thinking, and maybe he's in jest here, or just, I mean, this is reality as well, but like this isn't how people should be thinking about long-term savings, in my opinion. If you are thinking in 6 month terms, I mean, that's considered like like the 6 month treasury bills and stuff are considered high liquidity short-term assets on balance sheets of companies. That's not what Bitcoin is. Like Bitcoin, in my opinion, is the safest long-term asset you can possibly own. And cash is the safest short-term asset you can own. And then everything else is in between those two things. And it's up to you to decide where to allocate things, of course. But to me, Bitcoin is a bet on the future, the future of humanity, basically, that we will decide to better the world as opposed to continue to allow ourselves to be stolen from.
Yeah, I think that's the key. The system is designed to not let you realize that you're being stolen from.
Yeah.
Everything is being built to do that. The raise that you get isn't enough, but it still goes up just to make you manipulated and make you feel like, oh yeah, I'm getting paid more. You feel like it, but you're not actually. And like, okay, go ahead
Yeah, I was
first.
just gonna say, I mean, I've been guilty of that. Like my first job, I think I made like $6 an hour. I know that sounds crazy, but that was like training wage as like a 13-year-old, and then it went up to like 850, which was like minimum wage or something. And I remember a few years ago, um, Johnny Rockets came to Canada, which is like a fast food restaurant, and they were like, our minimum wage is $15 an hour. And I was like, whoa, that's crazy. That's so much for minimum wage when it's like $10 or $11 everywhere else. But that's still dog shit. That's nothing, right? Like that's nothing. And but it tricks your mind. Like we have this hardwired like nominal bias where we just see, oh, like I can make I can make $20 an hour easily. I can make $30. If I get a trade, I can make 50, $60 an hour. Um, it's still just it's not outpacing the cost of living. The cost of living is always going to outpace that. There's going to be there's these times of booms within industry. Like if the AI build out keeps going up, electricians are going to be able to sort of charge what they want, right? But that's not going to be something that happens forever, right? That's just it's a little boom time of outpacing, and you're going to acquire a bunch of wealth. You're probably going to buy a house that you can only afford at that time. Then your wage is going to go down as more people transition out of white collar to blue collar, and then the demand for those things sort of hits a peak and plateaus. Like the idea of having savings technology is to be able to weather anything that happens in the future. The idea of being able to access these these types of loan things that we talked about earlier is a way to uh limit the downside volatility of the rest of your life. And I think we get trapped by the nominal bias a little bit too much with things.
Yeah, a lot of people don't like the fact, like, whenever we post about Bitcoin, whenever I used to post about Bitcoin, people would say, "Oh, how is it possible that we can use a form of money where the amount of money that you're getting paid every single month is decreasing?" I mean, that's how it is right now. It's just that you don't see it. You just don't realize it. You don't see it's happening so slowly that you don't even realize it's happening.
Yeah.
And because of
It
that, people still think that, oh yeah, the US dollar is the best way to go because my income is going up. But it's not. If inflation is 10% and your income goes up 2%, you lost 8%.
exactly. Yeah, and it's you know, $1 million used to be a ton of money when I was a kid, and $100,000 was like an insane salary. Like that's what doctors would get, and all sorts of stuff. And it's just, I mean, it's so crazy to me. I'm still mind blown by how many people are like, oh, things like exactly what I'm saying. Like things used to be cheaper, and I used to make 20,000, and my house was only 15 grand to buy it. How can people not wrap? Why? Why is that the case? There's still so many people that can't connect those two things of like, why do things get more expensive? Why do wages go up? Why does any of this happen? Why don't things stay the same or get cheaper? It's so weird that we just like the vast majority of people just accept this, and Bitcoin totally flips that on its head. um Bitcoin, I mean, a lot of people say Bitcoin is like a deflationary asset, and how can you have a deflationary currency when, I mean, this is that thing that Peter Zion said on Joe Rogan, when the world expands with its productivity, you need money to also expand to lubricate, which I mean, that's just like total like nonsense. You think a second order to that just doesn't make any sense.
I don't even think he
Um,
could explain it.
no, no, because it's just
He
completely
just made it up.
illogical.
He
Yeah,
just
it
made it
just
up in
made
his
it up.
head.
It's just, yeah, you just ask why. Why do you need that? Oh, won't supply and demand just naturally fix that? If there's more supply of things, and there's more demand for things, that means people will be willing to give up their Bitcoin, whatever they
But
have for it.
that's the job of an economist, right? It's to keep people thinking that my job is important because they need to tell people, yeah, with Bitcoin it won't work because now my job won't matter anymore because the market will just deal with all the supply and demand.
Yeah,
His job is to make sure that people keep asking him questions. They keep having him on podcasts because he needs to keep making his appearances, right? Because he needs the world to think that he has some secret that the rest of the world doesn't. Like, let's think of it this way: FTX was trading against its customers, and it still lost money. It was insider trading, one of the most easily manipulated markets in the world, and it still went bankrupt. So how do you know that this one random guy, this one economist, knows enough about the world? Like, there's so many moving factors.
yeah,
Everywhere in the world, there's a different thing going on, and everything directly impacts the global supply and demand of things. And this guy is going to go online and he's going to tell you, "Oh yeah, I know what's going to happen to Bitcoin." The rest of the I know everything. It's like the Fed setting the interest rate for the entire world. It's not like they know everything. They don't.
no,
But they want you to believe that they know everything. And that's why this entire system is failing because there's so few inputs and garbage in leads to garbage out. So the system is garbage now.
yeah, and the thing is too is if like the free market is as perfect as of a system as there possibly can be, which means that
Yep.
there's constant imperfections, and because there's enough participants, those imperfections get arbed out. And so it's a constantly balancing thing. But when you throw in somebody that is controlling that and just throwing a dart at a dartboard to try to project a future scenario that they want uh, higher employment, right? One of the mandates, um, or low interest rates or cheaper mortgages or anything like that's literally trying to manipulate the entire economy of either a world of a country or the world. And as you said, the economy is so complex. There's all these inputs, there's all these things that if you have one wrong data point, if the data is manipulated in some way, it's going to skew all these things. It's like a butterfly effect. And I've heard people say that the economy, the global economy, is as complex as the human brain. And the human brain is, I mean, the way we've studied it is like, single digit percentages of understanding of what's going on there. It's just so complex. So, if that's true, then why would we trust anybody, no matter how much schooling, no matter how many people, why would we trust them to make any decisions to control this thing? Like that's what the Fed is trying to do is they're trying to control the market to have outcomes that they believe are beneficial, like low unemployment, um, uh, slipping my mind. What's the other dual mandate?
Uh,
Oh,
stable prices.
stable prices, right? Low inflation. Yeah. Um, so it's just the free market. If the market environment actually was not manipulated, it would be free to have stable prices and low unemployment if the market deemed that that was what was okay for the moment. And if it wasn't, it would not be, right? And you can actually look into history. And prior to the central bank in the U.S., there were many more um, like sort of booms and busts, but the size of them was minuscule compared to the large booms and busts that we've had since the Federal Reserve has been implemented. So the Federal Reserve basically all they do is they try to manipulate things and all it does is just compress it and stop it from happening in the short term and then it builds up and has a massive sort of like Great Depression, 2008 global financial crisis, multiple things throughout the decades. But prior to that, there would just be, okay, the markets become oversaturated. People were gambling on railroads, and the railroads didn't become as abundant and successful as we thought. So a bunch of people lost money, and a bunch of people lost jobs. And then they moved on to another industry. And it would be like a momentarily blip in the economy and a momentary depression for a subsect of people. And then it would recover really rapidly because the free market would just say, well, I have work to be done. I can hire you. You can work on my farm. You can work here or there, right? Um, and it and it just recovers naturally as the free market does, and overall leads to gradual more abundance for everybody. I mean, it's completely insane that we have what appears to be capitalism ends up being crony capitalism and a socialist idea of controlled central banking. It's just like the worst ideas of everything put together to create the financial system we have.
All of it is put together, and then we have these people who want the world to go in a certain direction. So let's say there's a lot of people, a lot of very wealthy people who want real estate to be finite because they own a lot of real estate. Why? I don't know if the people in the audience remember, but Trump said, "Do you remember when Trump was like, we don't want house prices to go down. We want the people who own those houses to keep their wealth. We don't
Yeah.
want some new guy who hasn't gone through whatever he said. He said some they don't deserve the houses or something like that. It was really crazy what he said. It's
Hmm.
like saying that, oh, so newer generations don't deserve to live inside a house. Newer generations have to be homeless. They have to be tenants forever. Is that what you're saying? That's extremely corrupt. And what they do to build that narrative, like to push the world in that direction, is they lend you as much money as you want to buy houses,
Yeah.
and they just lend as many. Where's if they keep pumping more money into the housing market will go up. They act like they don't understand this, but they do. They know all of this. They just like it, they want you to think a certain way, and they want you to do something, and they create the incentives to make that happen. They give you low interest rates on houses for a reason. What's that reason? It's to pump up the price of housing.
Yeah.
They're eventually, when they have enough Bitcoin, what these banks are going to do is they're going to decrease the interest rates on Bitcoin backed lending so that you don't sell your Bitcoin and Bitcoin gets hoarded and fewer and fewer people need to sell their Bitcoin in order to make sure that the price goes up even more, because demand will keep rising. They know that for a fact. They know that
Mhm.
the fact that they know that the demand will keep rising, but they want to make they'll need to make sure that the supply doesn't move. And
Yeah.
how are they going to do that? They're going to, number one, own all the Bitcoin, and number two, they're going to offer Bitcoin back loan lending, so that the people who actually have Bitcoin give them their Bitcoin, and they have even more control over it. And they make sure that this is the amount of Bitcoin that's not going into the market. Th- this this is how the wealthy control the world. They
Exactly.
don't actually they don't actually have power over us. They make us think they have power over us, and then we just fall into their traps. Like borrow money to buy a house, borrow money to buy a car, borrow money to get married, borrow money to do this and that and this and that, and keep going into debt. But don't borrow money to buy assets. Don't borrow money to buy Bitcoin, because Bitcoin's too volatile. It's too risky. Borrow money to buy a house, though. They're just
Yeah.
like they manipulate us into thinking a certain way and to pushing the world in a certain direction. And that's exactly what's happening right now.
Yeah, there's a few things there. I mean, real estate is always an interesting topic to talk with you about, but uh, if you look at like what happened in the 2008 financial crisis, I mean, people talk about, oh, real estate's always a good investment. It always goes up in the long term. It's stable. One of the reasons it's fairly stable is because you don't have a ticker outside your front house, outside of your house, and you don't actually know. But the GFC, the Great Financial Crisis, which was all basically. The dominoes falling were like the mortgage-backed securities and the poorly rated subprime loans and all of this. It was across the US, it was again single digits of actual foreclosures happening. It was really a small percentage of defaults causing a massive contagion of lower house valuations. It's so incredibly unstable. And these are the reason for that is because of how leveraged these things are. There's so much leverage in the real estate system, and it's the only way to, again, as you said, push the prices and valuations of these things up, which is part of the government partially wants to do that because of all the tax receipts that they get when there's transfers, when there's property taxes, any of that. And so, like what Trump did with pushing up the loan terms, right? I think in the states it was I don't know. I could be wrong on the exact numbers, but I believe it was 25 years you could get a mortgage for, and they pushed it to 30. And when you go to the
I
bank,
think it went from 15 to 30.
is that right?
Yeah,
15?
I think it was 15.
Okay.
I'll
Well,
find
maybe
out.
some
I'll find
people in
out.
the
Keep saying
yeah,
what you're
okay,
saying. I'll find out.
sure. When you go to the bank, and Rajat, you've bought a home, I've bought a home. When I went to the bank, it wasn't about the total cost of the house. It was about, okay, what is your monthly average of how much you earn? And is this house going to cost you with all the expenses? For me, I believe it was 25% of your income or less. And that's the metric they look at. And I believe it's between 25 and 30%. So if your housing costs are 30% or less, you'll qualify to be able to buy this home. And when they push out the loan term, all that's doing is making those monthly payments less for the same amount of cost of the home, which makes more people be able to afford it. But all that does is just allow the homeowner to actually say, well, I already had enough demand for my house, or I had maybe a little bit less demand, but because you've made it more affordable on monthly, I can still raise the cost or keep the cost at the same price. So it's a mechanism of inflating the housing costs even more by allowing the debt to be longer.
Yeah, let's show that on a compound interest calculator. I couldn't find the details on that. I think it went from 15 to 30 to now 50. They're throwing out there.
50
Um,
50 is what he wants supposedly.
yeah, 50 is what he wants. Sorry, do you
That's
mind just
insane.
sharing my screen there?
Of course.
Okay, so what you see here is, let's say if you had a 15-year mortgage at 6% on a $200,000 house,
That's 20,000.
$200,000
Yeah,
house,
there you go.
you'd pay $1,687 a month. But now let's say you got a 30-year mortgage. You could now buy, let's say, a $300,000 house. So it's 1,687. Now it's 1,798. Only $112 more, $111 more will let you buy $100,000 more expensive of a house.
Which is 50% more than what
50%
you
more.
which is crazy for an extra $100 a month, which
Yeah,
is like, that's very rarely going to either make you qualify or not qualify, $100 difference.
insane. And then, okay, so now let's say, for example, we go 50 years. Now we go to 350,000. But the thing is that over time, the benefit from this is decreasing. It's falling.
Yeah,
There's a limit to
right.
how much you can get out of this, right? So you can see here they went from 15 to 30, and you could pay $100 more per month, and you'd be able to buy a house that's 50% more in price. But you go from 30 to 50, so you're adding more years and you're adding a higher percentage. So you went to you increased it by 60%. More years, but now you're paying $142 more for a
Mhm.
$50,000 more expensive house. So it looks like it's helping you, but it's actually hurting you because the price of a house can keep going up.
Right. Yeah, and who the hell like y the average lifespan is like what, 75 years or something? And
Yeah,
I know it's the average. So if you buy a home when you're 25, you get a loan for 50 years, you on average, you're going to just pay it off. Like,
yeah,
that's insane.
yeah.
Like, that's crazy.
And take a look at this $350,000 house. You're paying 3 times. You're paying more than double in interest.
Yeah.
More than double, 68% in interest.
So guess who loves this as well? It's not just people who have the assets already that want to keep the inflated prices of their assets. It's the banks that
Mhm.
I think this one idea, if people understood the magnitude of what it means, it would change the entire world. Which the idea is when you go to a bank and you get a mortgage or a loan, they don't have that money prior to you getting that loan. They just create the money by putting the money in your account, and now it exists.
Yeah.
That is so crazy, and people don't understand what that means and how banks have so much power over creation of money just because of that. So basically, this is creating over its lifespan uh, all of this money, right? The total amount of interest here, right? Like all of this money has to be created. Um,
You're basically just bringing your future consumption to the present. Like, somebody
yeah,
who would have bought a house 50 years from now by saving can now buy it by just making their payments over time. And then what's happening is it's not even like, okay, so if you're somebody who buys the house, you're probably at an advantage because in 50 years, what's $1,800 going to buy?
yeah, a lot less.
A lot less, right? So you actually do get a bit of an advantage if you have the 50-year term because you're borrowing money. That's the only reason. But
Yeah,
then the other people who get an advantage are even bigger. So banks get $755,000 from you for nothing. They literally did nothing. They just printed this out of nothing. And then your government can reassess property values, and they can say, "Oh, your house price went up because the house next to you, the person who bought it took a 50-year mortgage and they're willing to pay $450,000 for it." So now you see here, this number just keeps rising and it keeps rising. You went from 200,000 to 450,000 because somebody can afford $2,300 a month.
yeah. Yeah, that's what's interesting here is you can follow each one of these threads. Like the idea of this kind of system and changes to this system creates all these knock-on effects.
Yeah.
Okay, so it raises the ability for people to be able to pay more for a house. Okay, well that affects the assessment of it, which affects the property tax of it. Because there's more money that's needed, that means that and there's all this money that gets created. Sure, the homeowner or the home buyer benefits in the long term, but only because they're super leveraged to this, and the dollar value of what they're paying goes down in amounts, and everything else continues to inflate beyond it. The banks make a ton of money. I mean, it's just it's a mess. Like this is like how could somebody look at all of this and be like, "Oh, this is going to turn out great. This system's totally going to work for everybody."
I read really great quote that said, the house isn't the asset, the mortgage is. The money that you're bringing into the present is the asset. You're just using the house as collateral to get that money into the present. And then
Yeah.
it just like it all tie and this is why it takes so long to learn about Bitcoin. You have to learn all these different little tidbits of information. You don't get them all from one place. You have to keep listening to, let's say, different podcasts, and you have to think about it. You have to put in the time to actually like learn and figure out what's going on. And then you have to you listen to another podcast, you get another little tidbit of information. You're like, holy shit, my whole world views changed. It just changed again.
Yeah.
And then you try to connect the dots again. And then you listen to another podcast. Again, one tidbit changes your entire worldview again. You're like, oh my God, this is like just changing my entire paradigm. That's exactly what happened to me. That's
Yeah.
why I read the Bitcoin Standard like 4 or 5 times. Because every time I read it, I got some new piece of information. Maybe if I read it again, I'll get some new piece of information. And
Mhm.
it'll just change my worldview again. Because this isn't easy to learn. If it was easy to learn, then everybody would understand it. Everybody would understand Bitcoin if it was easy to learn, but it's
Yeah.
not.
No, totally. You're right. And um yeah, as you said, there's all these different little things like what we just explained here with real estate and the money printing that happens for a loan and all of this. How would you understand that unless you begin to dive into learning these things? Like you're like I took out a loan. I bought a home in 2020 and I didn't really know all this.
Same.
I just cared about buying a home. I just said, okay, well, this is how much I make on average. This is my last couple of years of my business. Can I buy a home? I didn't think, oh, well, they're just going to print this money out of nothing. Like, they're just creating this money. I didn't really think about that, right? Um, and ultimately, all of this system, the printing, it might benefit in the long term the home buyer that is buying something that's constantly being inflated. It will benefit the banks because they're creating capital at no cost with an interest rate attached to it that is being paid, and that's money back to them. Who does it not benefit? It benefits anybody holding the dollars that are being debased, right? When there's more currency units, that's more supply for if you just look at it as if demand stays the same and there's more supply of something, then the demand has leverage and ability to pay less for that thing, and the suppliers want to get rid of that thing for cheaper because there's more competition to get rid of it, right? There's too much supply. So that's essentially what is happening here is there's more supply of dollars, and the savers aren't recognizing that their money is getting eroded away because there's more of it. And um, it's beneficial for everybody involved in that system to tighten the blindfolds on people, right? To make them not realize this kind of stuff. So I mean, to me, I always look at incentives, right? What is the incentives drive outcomes? I think is like that saying, and the incentive of Jerome Powell, of all the banks, the central bankers, all the economists, the incentives is essentially to keep everybody blind to how destructive this system is to the average person, so that it still ends up being extractive for them. If everybody woke up to this, nobody would hold any dollars. Everybody would say, I mean, fiat would go to zero, right? That's what happens in these countries like Venezuela or recently in Iran. The currency goes to nothing because the faith in the system goes to nothing, right? It's all based on faith of this system being anything, of being able to give somebody else that dollar for relatively the same amount of value as you paid for that dollar.
Yeah,
It's a scam.
agreed.
Exactly.
It's all just the dollar is going to zero, and we're just being brainwashed. Think about how long it would have taken for us to get brainwashed to accept these dollars that the wealthy get to get they get for free. They don't have to
Yeah.
work for them. That's the information asymmetry here. Once you understand that the wealthy, I mean, of course, they work for those dollars at one point, but then after they have enough assets and they have enough wealth, they don't need to work for dollars anymore. They can just borrow them. They don't have to think about opportunity cost anymore because let's say, for example, you wanted a Ferrari or you wanted even like some people don't even have a basic car, but these wealthy people, if they want to get a Ferrari, they have 10 rental properties. Which one do I borrow against to buy my car? And they're probably not going to do that, but that's how that's how most people think. They have these assets. They can buy whatever they want with them. They can go on any vacation they want because they're continuing to get cash flow. And again, that's another thing that's just entangled in the system. It's designed to make us work longer. The wealthy have turned Bitcoin. The wealthy have turned real estate into a business.
Yeah.
They've turned our basic need into a business. Of course, with people. What people are going to say here is they're going to say, "Oh, but grocery stores are a business too. We need food." At a grocery store, if you buy food, you don't have to return it at the end of the month. Whereas with real
Right.
estate, you do.
You
You
get to
return your
actually
real estate,
consume it.
right? You give it back. That's the only business where that happens. Like it's and the world just thinks of it as normal.
Yeah, that's really true. That's, very true. Um, yeah, and the thing is we've been talking about how much, um, like, the whole financial system, I don't think people realize how much leverage is in the system. And leverage is borrowed money and money that is in the future, right? It's if you look at the government debt, like the government debt is a great example of this. $39 trillion worth of future value brought to the present over the past however long that's been measured for. And this is all leverage. And so you need debt benefits from debasement. So as we've talked about, the home buyer benefits, the bank benefits, the savers do not benefit because they don't have any leverage in the system. They don't have any debt. They actually have the, I guess, asset for lack of a better term in this example. Um, they have the dollars, right? They have the present value of it, and it's being devalued. All the debt is being devalued. So what's really interesting here is Bitcoin, it is inflationary, but its inflation is programmatic. There's 3.125 new Bitcoin being added to the into the Bitcoin pool of Bitcoin, but it has a fixed supply, and it might even be slightly deflationary because of lost Bitcoin, of people losing coins and all that stuff. Um, and at some point, it will definitely become deflationary as far as amount of Bitcoin being created and used in the environment. So this is actually incredibly destructive to the current financial system. And I think actually a lot of people that understand the current financial system say they're probably naysayers about Bitcoin because of the fixed issuance and the max supply, because they know it's incompatible with the current financial system that we have. It actually begins to erode the fact that that like deflation and lack of access to new capital makes debt more expensive. So that would begin to upheave the current financial system and basically destroy all these wealthy people that are extremely over leveraged. And just because something is incompatible doesn't mean that it's not. Like people will say, "Oh, it's sort of incompatible because of this deflationary sense of it with the current financial system. Therefore, it's not going to work," or something like that, or they hate it because of that, or they don't want to use it, or whatever. But that's the wrong way to think about it, because it's actually going to um, destroy the fiat system. That's honestly the way I think about it. People think that's
Yeah,
sort of unbelievable or whatever, but I actually think Bitcoin is going to destroy the financial system.
it sounds like a conspiracy theory.
Yeah, it sounds crazy.
It sounds absolutely nuts. So I'm not even surprised that most people don't get it because they think like, oh, these guys are crazy. Like they're just like they're on like a mushroom trip or something whenever they're talking about this stuff. But no, we just sound like we're crazy. We're really not. If a crazy person would probably say that, but we're not. Like we're actually not. We're trying to help you do the research for yourself. We don't even want you to just listen to us. Don't even blindly listen to us. Do the research for yourself. Search for everything that we've looked at, that we've talked about here, and think of it logically. If the number of dollars in the system go up, then what would happen to the price of everything if the number of things remains the same?
Yeah.
If the number of houses remains the same, but the number of dollars is growing by billions, trillions of dollars each year, then what happens to the price of housing? It goes up. And then there was a comment here from VHF. I'm not picking on you, VHF, but this is exactly how most people think. He said you could feasibly buy an apartment outright, rent it out, and the rent pays for the mortgage on the second apartment, or on this, yeah, the second apartment. Isn't that the definition of a Ponzi scheme? You need more and more people to come into the market. What if you run out of people to pay rent on the house? People are now starting to live in in their um in their cars. They're living in like vans because that can replace housing. This is the definition of a Ponzi scheme, but people don't see it, right? Most people just think like, yeah, that's the way I'm gonna go. I know you don't like real estate. You also said rentals is hell. It is. But this is how most people think, right? Most people think, oh yeah, I can just go to school, I'll get a job, pays me enough. I'll use that income as a more to get a mortgage, and I'll just buy a rental property, and somebody will pay for it. At some point, the number of renters run out. They don't last forever. They don't just keep growing. People figure out that, "Oh, this thing is a Ponzi scheme."
Yeah. Yeah, it's a Ponzi scheme, built on leverage too, because I mean,
Yep.
that example is leverage. Getting an apartment, um, renting it out, and then the rent pays for a mortgage on a second apartment. That means you're buying another apartment that is reliant on the previous apartment having a tenant in it, and the tenant that's paying, and that's all risk that's going to make you not be able to pay for your second apartment, which is going to put you further into debt if you default on both of those. So I mean,
Yeah.
it's just such a scary situation that people get so over levered in real estate, without realizing it. I know actually I have multiple friends who have lost, who have declared bankruptcy because of real estate investing. And
Wow.
people are like, well, it's, passive income, all of this. It's great in theory, but and I think Sin Diesel talked about like sort of the other humans, right, involved. This is 100% the problem. Um, and actually your friend Sonny, posts on Twitter all the time. He finds these people that are like, "Oh, I had to evict my tenant after 9 months and blah, blah, blah." And he always has the same comment that says, "Oh, that's crazy. I was gonna buy an apartment, but then I saw this post and many other posts like it and just bought Bitcoin instead." And it's like he posts that on it's like copy and paste on every single one of these people having
So
problems
smart.
with their tenants. And it's so true. It's just like, why do all this extra work, put yourself in such a risky position, all for just a menial gain above inflation? And the only reason that there's outsized returns in real estate is because of the leverage you can get. And the leverage is only enabled because it's to prop up the entire Ponzi scheme that real estate is. The stock market's the same, right? Like the stock market is basically a Ponzi scheme for the retirement class. It's ridiculous.
Yeah. Yeah, and they just don't even see it. They don't see that what they're doing is promoting a Ponzi scheme,
No,
'cause I don't think they've thought about it. They just assume that, "Oh, it works the way it does, and it'll keep working the way it does." The even, like, if you think about even people thinking, "Oh, the dollar's been around for such a long time, it's never gonna fail." It's only been around for, like, 200 years. Currencies constantly fail. Every single fiat currency in history has failed. Either
yeah,
they've failed or they're close to failing. Like the US dollar is close to failing. If enough people stop believing it, that it has value, it will fail. Like they're designed to fail. They're designed to go down to zero. And yet people defend them. This is the thing that I think actually this makes me think that Bitcoin adoption is going to take a lot longer than we think. I think
it
people aren't
is.
gonna they're not gonna I used to think they're gonna figure it out at 100K, but no. They think that 100K is just, "Oh, it's gonna turn around at 100K and it's going to 0. 100K was your last stop, losers." And then it's gonna go to 1,000,000, they're gonna say the same thing, "Oh, yeah, 1,000,000's the last stop, losers, you better get out whenever you can." It's like Peter Schiff's page is just a gauge for how the regular retail investor is thinking.
Yeah,
"Oh, um, gold is at fi" remember when he said gold is at 5,100, Bitcoin is going down, you better sell your Bitcoin and buy gold. Now gold is at 4,500.
yeah.
It's a joke.
It's just
They
talking his own book.
they don't see the
Yeah,
trends. That's
no,
the and because of that, I think it's probably gonna take like 30 years. So we all have enough time to keep stacking. Just keep stacking, just keep buying, right? Just keep buying more Bitcoin. Let time take care of everything else. You're not gonna if you try to just own, let's say, zero point 0.1 Bitcoin, and you think that, "Oh, I'm gonna become financially free next year." No, you're not. It's gonna take you some time. It'll give you some it'll relieve some financial stress, but it won't make you rich.
Mhm.
Keep stacking, just keep creating value. At some point, you'll have enough Bitcoin that it does make you financially free. And at that point, you're probably never going to want to sell.
Yeah, exactly. And we at the beginning of the show we talked about loans and stuff. And when we first started talking about loans many months ago, you mentioned how it's almost like you have like a I can't remember exactly how you described it, but like you're taking out 50% of the value if you have a 50% LTV. So it's almost like you're extracting some of the value out of it immediately. Um, and then it's like a I can't remember if you said it was like kind of like a stop loss or something like that, but it's like you're you're taking out some of the current value out of it, which will lower your future gains of that essentially, because now you have this a debt obligation against it, but you're still able to use it in the present. And that's what is going to give you holding Bitcoin into the future. Obviously, this is all a patience game, but as the years go by, you can do those kind of things. It's going to become easier and easier to do, and you'll need to sell your Bitcoin less and less. Right? That's really what's going to happen as the fiat dollar continues to exist. Is you're going to have more ability to use your Bitcoin to acquire more fiat and spend it however you want, as fiat becomes more abundant and as Bitcoin becomes more scarce. And I think you're right that this is going to take a lot longer than people realize. And because of that, people are going to get really impatient. And this happens all the time. Like people will get impatient for Bitcoin because it trades sideways for 3 to 6 months or something like that. And people are, oh, it's not doing anything. I'm just going to wait till it goes to 40K and I'll buy back lower. Um, you just need patience. You just need serious amounts of patience with this. And the other thing I'd just say here too is the euro, which is a very prominent fiat currency, right? The US dollar, obviously, number one up there. Euro is top in the top five. I don't know exactly which one it is, but it's 27 years old. It's younger than you and I. This is a fiat currency that is as fresh as it can be. It's very, very new and it has caught on a lot, right? There's been all this forced adoption in Europe. Uh, and Bitcoin is 17 years old, right? Bitcoin is even newer than that. And people are wondering, hey, why isn't this thing taken over? Why hasn't this thing uprooted, upended, completely flipped upside down? The real estate Ponzi, the stock Ponzi, the fiat currency, the central bank, the member banks. Why hasn't it destroyed everything? Well, because those things are so old and people are still 27 years ago, the euro was invented and people are still believing in that crap, right? Like people are still just in this mindset of just believing what they're raised in. It's going to take so long. It's going to take a lot longer than people
Yeah.
realize for the suddenly moment, the S curve adoption of Bitcoin. But it'll happen. I mean, I believe it's going to happen at least.
Yeah, I think so too. I think it'll happen. It'll take some time. Like the good thing is that we have time to stack. So if actually there was a post that I always like to refer back to in 2024. I think when Bitcoin was at like near 100K in November. Somebody said stop doing everything and just stack Bitcoin. Just work your job. Don't quit your job. Stay in your job because Bitcoin's gonna go. It's gonna start ripping. It's gonna go to this, and that price. Don't start a new business. There's no point. Just buy Bitcoin because Bitcoin is the best thing you can do. No, working on yourself is the best thing you can do. I'm so happy that I ignored that. I always think about that post. I'm so happy that I ignored it because if I had just stayed in my job, I would have been miserable. I already quit my job at that point, but I was thinking at a point, okay, maybe I need to get a job again because I'm not making enough money from this. But I kept at it. I kept working on what I'm doing. Sure, you had a similar experience, right? But we kept doing what we're doing. We bought Bitcoin, of course, but we also invested in ourselves. And now we're able to buy more Bitcoin than we were from before then. And the price is the same now. So you just keep stacking, keep working on yourself, keep stacking. It's like what Jor says. Every time we have one of these weekly live sessions, it's like a block added to our chain, right?
Hmm.
Every time you do something that's adding skills to your person, you're just building yourself up. You're just adding a brick. You're building the house brick by brick. You're building a citadel. brick by brick. You're building a foundation. You're digging you're digging with one shovel at a time. Like you're taking out one little bit of dirt at a time. And you're adding little bits more of cement, and you're building that foundation that's so powerful. And you just keep building it. You just keep building it. You don't stop. You just keep going. At some point, it'll just feel like all the work that you did paid off.
Yeah.
That works with Bitcoin. That works with building a career. That works with exercise. It works with relationships. It works with your personal finances. It works with building wealth. It works with everything. It's just compounding and building and building, and you continue to build for as long as you can until at some point you have something so big that it doesn't even feel real.
Yeah. And I mean, that's a great point too. Like, um, you should invest in yourself for multiple reasons. I would say one of them is you have a higher likelihood of investing in yourself and outperforming Bitcoin's return than investing in many other things. So you have that possibility of improving your cash flow because of that. Um, you also, of course, only have your one life to live. So as you invest in yourself, you're more likely to be able to do things that are meaningful and valuable to you and things you believe in. If you don't do any of that, you just, keep your head down, work your office job or labor job or whatever it is. Sure, you might be able to stack some Bitcoin, but you might be miserable that whole time, which will lead to maybe physical problems, mental problems, all sorts of stuff that just ends up not being worth it, even if you end up having a stack of Bitcoin. So I think it's underrated. The personal development side of it, that's something you learn as well with Bitcoin. Like Bitcoin taught me a lot about time preference, and I learned like, oh, I'm doing a lot of things that are sort of just only serving me right now. They're not serving me a year in the future, or 2 years in the future, 10 years into the future. I'm not building something by doing the activities that I'm doing right now. And that makes you think, okay, well, what can I do that's going to have legs? Not just give me cash right now, but maybe it's working on some sort of intellectual property of some kind, or um, it just makes you think longer term, which allows you to plan to have a family, to have a home, not a house that you're renting out, but home. Like these are monumental. These things change your life for the better, in my opinion.
Yeah. Yeah. Keep investing in yourself, keep investing in your Bitcoin stack, keep
Yeah.
investing in your knowledge. And I think that actually is the perfect way to segue into our community.
Yep. Yeah. So we have a online learning community called I guess it's just the Maple
Ma-
School,
Maple
isn't it?
Bitcoin.
Maple
Maple
Bitcoin
Bitcoin
School.
School.
Yeah, Maple Bitcoin School. We actually have a brand new course that we released on there called um, the Missing Guide for your Bitcoin Hardware Wallet. And essentially, it is exactly what so many Bitcoiners need. Like you can take self custody, you can have Sparrow, you can have a cold card, all of this, but maybe you don't actually know if you feel really secure with it, if you know what you're doing, and you might just be worried about the about what's going on there. Did I do everything right? And there's a lot of great resources for just like kind of technically doing things out there that you can find on YouTube. And I have a whole tutorial series about Cold Card, but it's missing a lot of the sort of nuance, and that nuance, understanding the nuance of what happens with Bitcoin gives you a lot of confidence, and then you can sleep at night. You're not worried about your Bitcoin stack. You have a good security model and all sorts of things like that. So that's what Rajat, Jor, and I have worked on for the past almost couple of months now, I guess. It's been a little while we've been working on it. I mean, my whole background has changed at this point.
Bitcoin was at 89,000 then.
Right. Yeah, crazy.
That's how you know how far back it was.
Yeah. And yeah, so we only have 3 episodes up, but we're actively uploading them. I think there's 11 episodes total with the intro, and incredible value there. So you can check out the link. I'm actually going to link it in the chat as well. Um, and then Rajat, do you have anything to add there as well?
Yeah, absolutely. So you have all this. You have all the lost guide to Maple Bitcoin cold storage, or to Bitcoin cold storage. We also have a couple of other courses on here. So, for example, we have the Bitcoin fundamentals, exchanging dollars for sats, how to do it, private key management for up to people with up to 10 million satoshis and more. What is Bitcoin? So in this, we go into what exactly the Bitcoin network is versus what is Bitcoin the coin. And there's a 3-part series for this. Each one is like an hour long. Really great content that we don't have on YouTube. There's another one here. We all like to talk about lifestyle design and just building your life the way that you want it to be. So the one thing that I think is really important is people need to be able to get cash when they need to, like what we're talking about in this session here. So we have one about using Bitcoin as collateral. We have another one from Forrest about selling MicroStrategy, covered calls for income. You would have done so well by doing this if you had sold calls the last maybe year or so, since like November 2024 or something.
I plan on coming out with a video showing exactly my results, but I've earned, I believe it's roughly over about $10,000 on 100 shares of
Wow.
MSTR selling covered calls on it. So
So $10,000 on how much are the shares worth?
now they're worth like uh
14?
yeah, 14,000 or something.
14.
Yeah.
Okay, so you made like 70% by doing this.
Yeah.
Right, but of course there are downsides. Don't even think of that. Don't think that, oh, this is free money. You need to learn how to do it.
No.
Because if strategy goes up, you could lose your shares.
Yeah, exactly. And there's risks, ways to manage that risk and all sorts of different things that I talk about specifically in that video,
Yeah,
of not losing your shares and being able to continue to roll these and all sorts of stuff. But the way I think about it is like people think about like getting another house and renting it out. I think it was getting another 100 shares of a volatile asset and selling more covered calls on it, and that covered calls being the rent that you take.
really
Um,
smart way of thinking.
yeah.
Really, really great way of thinking of it. Okay, and then what else do we have? So we have all you need is Bitcoin and cash. That's it. You don't need stocks. You don't need real estate. You don't need bonds. You don't need any of that. And now with STRC, all you need is cash, STRC, Bitcoin. That's it. You don't need anything else. You don't need, let's say, for example, if you have a 2-month goal, you can plan that with cash, Bitcoin, and STRC. If you have a 6-month goal, you can plan that with cash, Bitcoin, and STRC. If you have a year out, 2 years out, 3 years, 5, 10, 20, 30, 50 years out goal, you can plan those with these three assets. And in this video, we explain how that works. And then we have this is one of my exclusive pieces of content, how to create content to buy more Bitcoin. A lot of people have liked this. A lot of people have found a lot of value in this because they want to do this themselves. Like we were talking about before, building your own business, like Forrest, building your own income stream.
Mhm.
You're buying a piece of digital real estate, and you can sell calls against it all the time. That's his way. That's the way that he thinks about it. The way that I think of social media is exactly the same thing. So you create digital real estate on the internet, and every time somebody lands on your real estate, you get paid.
Yeah.
It's like they're paying rent by watching ads on your content. Or let's say, for example, you have a product to sell. They pay you by buying your product. And your digital real estate, your piece of content is the billboard in a way. That billboard is basically just advertising everything that you do. It's advertising all of your skills, advertising all of the things that you can sell to people. I think this is extremely, extremely valuable. I'm super passionate about this as well. I think that this can change a lot of people's lives. So, along with the course that Forrest explained there, we have all these other pieces of content. We also do weekly live sessions.
Mhm.
You can see that here. Maple Bitcoin Happy Hour. We have one in 11
10
minutes
minutes.
actually.
Yeah.
One great thing here is I like this about Skool. If you want to, you can join with the trial. You can just cancel it whenever you want to.
Yeah.
You can. It's $50 a month. We've raised the price because of the course, and we're continuously adding more content. We've raised the price. So if you want to, let's say for example, you want to just join. It's almost like a Zoom session. You can join us, me and Forrest, today. We have our weekly live session where we're just going to talk to you about whatever questions you have. It's almost like a Q&A session. So join it. You can leave it after that hour is done. You can leave the community after that hour is done. Perfectly fine. If that's what you want to do. If you don't find value in it, that's perfectly okay. But try it out. It's free.
Yeah, exactly. Try it out and you'll end up liking. I mean, there's all sorts of things there. The network is really important as well. There's really smart people, really amazing people, all Bitcoiners, different levels of knowledge, different expertise beyond us in certain fields. And if you pose a question in the community tab, you'll get answers from us. You'll get answers from other people. You'll be able to meet other people that are Bitcoiners. And um, I think the saying your network is your net worth is so underrated. Actually, it's it's like that saying as well, where it's like you're the sum of the five people you're around the most. You want to be around uh, people that are providing value in the world, and you will end up achieving more because of your ambition from them as well. So there's a lot of great people in the community already, so consider joining.
Yep. Yep. Lots of great content, lots of great people. You get to meet with us not one on one, but the three of us, and you can ask any questions you have. Really fun group to be in. You can ask any questions in the community session. We just don't want to expose anybody in there who's asked questions,
Yeah.
but ask any questions you have. You can send us DMs through the chats. You can send us a message. And of course, we all have our own link where you can book a call. These are paid calls, they're separate from, let's say, the community. You can book a call with either of us, and we can help you with anything that you need help with related to Bitcoin. If you have any questions, if you have any concerns, if you have anything that you want to learn about, we can answer those questions.
Yeah. Awesome. Um, so we got a couple minutes left here.
Yep.
There's a couple questions in the chat. I don't know if you found any. I haven't been starring them, but this guy asked this a couple different times. It looks like maybe he's inheriting a house or something. What if one inherits a paid off house, sell or rent out? Um, yeah, I mean, the situation is always going to be dependent. Like, I don't know what your situation is. Does it make sense that you want to be a landlord, that you want to have the risk of people at the house? Yes, it's fully paid off, which actually means that you have no leverage against it, which means that probably it's only just going to appreciate at the level of debasement, the home itself. Plus, there's all the maintenance you have to do with it. Do you like getting calls saying the hot water tank burst and the floor is ruined and you got to go deal with insurance and handyman and all sorts of things? To me, I don't want to be a landlord, so I would sell it. But that's me. I don't know what your situation is. And I would invest it in I would take that lump sum that you would get from selling and invest in something that I think would outperform a non-leveraged home, and something that has less maintenance to do with it. That's personally what I would do.
Yeah, agreed. I don't personally think of myself as wanting to. I don't want to I don't want to take advantage. Or sorry, I don't want to take the headache of dealing with a tenant. I don't want that.
No.
Um, that's not. I don't want to take. I don't want to take a responsibility of somebody else, or I don't want somebody else to have responsibility over my assets, over my life. They can easily destroy the property. They can easily just, I mean, sue me for something. I don't want that liability. I don't want that. I don't want the government to be able to take my property from me. I don't want to, let's say, for example, if you had to leave the country and you need to get rid of your property, there's so many disadvantages to real estate that I
Yeah.
just would not want to hold it. But again, that's up to you. It's your choice, your decision, how you do it. I think the, I think there's alternatives that are probably better. Um, let's say, for example, you could sell the house. You have to pay taxes on it, of course, but if you buy STRC, you can get cash flow probably at a higher rate, and you don't have to have the headache of maintaining a property.
Yeah.
That's one
Yeah.
thing. You can sell it and you
100%.
can buy Bitcoin. You can sell it and you can buy MSTR. You could sell it and you can buy the stock market. I would say even that's a better decision for me personally than owning a rental property.
Yeah. Yeah, and I mean, I personally went through this. I didn't have a fully paid off house, but I had a house that was like the mortgage was insanely low. I bought it. Um, it was like a fixer upper old farmhouse on acreage in the middle of nowhere, and it doubled in value over 3 years. So I sold it. I took that money and bought Bitcoin and bought assets, and um, much happier not doing that. And actually, initially, oh, sorry, no, I didn't with that money. I had some money prior, but my idea was like, well, I like the idea of of real estate and rentals before I knew really that much about Bitcoin or really believed that much about Bitcoin. So I bought REITs, real estate investment trusts, because of the concept of being exposed to real estate, which I thought was a good idea at the time, and having cash flow and having no responsibility of dealing with tenants. Not what I would do today, but I think a lot of people, like, growing up, I read like Rich Dad Poor Dad and different things about investing and how real estate is always such a wealth builder and all this. And none of it talked about REITs. I don't know why, but to me, like, that's a no brainer if that's really what you believe in. Like, I don't know. Just the management is such a headache. I would never want to. People need to think about real estate if they have a tenants as a business, not as a passive investment. It's not a passive investment. It's a business that you now have employees in the form of property managers, in the form of an electrician, a handyman. You have customers in the form of your tenant, and sometimes customers pay you, and sometimes they don't. Sometimes they steal from you. Sometimes they damage things. None of that is something I would ever wanna deal with. That's not the type of business I wanna be in.
Yeah, I've seen too many nightmare videos of people like, oh man, there's some nasty ones. Like there's one guy who had his rental property and there was literally shit on the walls.
Yeah.
The tenants just left. They didn't even give him the keys. They just left. They
Dude,
stopped paying rent. What can you
the
do in
place
that case? Can't do
the place
anything. You just go ahead.
yeah, sorry. The place that I live here, my landlord, as I was checking out this place and talking to him and stuff, he's like, "The last tenants we had stole the dishwasher."
Wow.
They left in the middle of the night, and they stole the dishwasher. It's like such a just a minor inconvenience and, like, so crazy. They
Yeah.
didn't pay for 3 months, and they stole the dishwasher when they left. I was like,
Yeah. My
"Bro,
my
that
parents
sucks."
that's horrible. My parents had a tenant who, I guess he was angry because like his maybe he lost his job or something, or he was really struggling. And one night he was just like smashing dishes on the wall. It was
Crazy.
insane. He's just like smashing his dishes on the wall, and the wall obviously got damaged, but his dishes are all broken now. And like there's this is what you have to deal with.
It's
I don't
crazy,
even
man.
Like, I don't even know what to say. I feel like if you're gonna keep the rental property for, um, if you're gonna keep the rental property maybe to like to help people, then that's different. But again, you're
Mhm.
taking that risk, right? You have that $700,000 property. What else can you do with it? You can
Yeah.
also help more people with Bitcoin if you want to. You can help more people by selling it and buying STRC. So, Josh said, would owning a rental property even outperform holding STRC when you take into account property taxes and expenses? Probably not. And those expenses are always going to be volatile. And as the property gets older, those expenses are going to increase because property taxes increase. Apparently, this is the only asset that actually grows in price as it becomes less usable. Like it wears and tears, and the price still goes up.
Yeah.
Makes no sense. But you have to consider all that.
Yeah, and I think the only time that it would is when you're able to put 5%, 10% down and get
Yeah.
incredible leverage at low interest rate, and it outpaces it based on that. I think
Yes.
that's the only time it works, and then you're adding all of that additional risk in there. So risk reward, right? This is the way that people should be. They shouldn't just think, okay, what's the total return of this? I mean, this is why hedge funds and stuff will underperform the S&P 500 and still have millions and billions of dollars under management, is because they have a different risk to reward ratio that some people find attractive. So the risk reward of a highly leveraged real estate investment in one jurisdiction that has all the risks that we've previously stated is a lot higher than a Bitcoin backed variable rate preferred equity, in my opinion. But
Yeah.
again, that's
Agreed.
my opinion.
Agreed.
Yeah. All right, guys. Yeah, we'll wrap up the show here. Check out the happy hour. It's on the Maple School. I'll just throw up the QR code again one more time here. This is something you can scan to join the Maple School community, and we'll be on there for another hour kind of talking about different things. You can hop on, like Rajat said, it's like a Zoom call. You can turn your mic on, your camera on, ask us questions, a lot more personal, a lot more intimate, and we'll actually get to them. A lot of questions went missed today because we just chatted so much, but we'll see you guys over there on the Skool community. Thanks, everyone. And thanks for chat.
You too, Jor. Or not Jor, Forrest.